Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad. Well, it's yet another day when the bears have tightened the grip on the markets. But yes, the expiry-related swings have compelled Nifty to make a smart comeback. But right now, Nifty is once again down above that, 25,900 odd levels as of now. So yes, so to speak, we did see a good comeback, but then once again, we are down below at these levels. And the Nifty itself is seeing a decline of about 100 points as of now. 0.5% decline coming in for the Nifty itself. But yes, even Sensex saw a recovery of about 300 to 400 points from the day's low. Right now, it's seeing a decline of about nearly 450 points. So right now, from the day's low itself, the Sensex has seen a recovery of about 200 points itself. So in the last hour or so, we did see a bout of selling pressure which came in for the benchmark indices, and that's why we did see that the Nifty has slipped below that 25,900 mark itself that it had mounted earlier in the day itself. But yes, good news coming in from the market breadth, particularly, which has turned positive. Clearly, advances have taken an upper hand right now. 1:1, that's the advance decline ratio. So yes, the texture of the market is still on the improving end after the sharp sell-off that we saw yesterday. Now, whether or not this goes ahead into the upcoming trading sessions is something that we need to watch out for. But yes, a good takeaway coming in from India VIX also. It has cooled off by 1% itself, showcasing that there is certain stability which is returning to the markets right now. But yes, optimism coming in from the broader end of the markets also. Nifty mid-cap showcasing a gain of about 0.3%. Small caps showcasing a steady gain of about, 0.7%. Yesterday, we did see small cap index reeling under the pressure, but today particularly it has seen a recovery of over 300 points right now, and it has been outperforming the benchmark index in today's trading session. But yes, sectorally, of where we stand as of now, Nifty IT index seeing some profit booking, 1% decline coming in ahead of the FOMC meeting, which is on the way, and of course, we'll be seeing the outcome tomorrow itself. Other than that, you can see the other sectoral indices which have been reeling under pressure. That includes the likes of Nifty Metal Index seeing a cut of more than 0.5% itself. Nifty Pharma Index also seeing a decline for the third consecutive day. On the other hand, what is doing well, that is your Nifty Consumer Durables Index seeing a gain of about 1%. It snapped its 6-day losing streak, and you can see consumer durable stocks have been seeing good buying interest. Realty and PSU banks have also been doing well in this upbeat market sentiment. So yes, both of these pockets are also seeing some good buying interest from the markets itself. But it's coming to the top gainers and losers of where we stand. Nifty Titan has been doing well, 2% gains coming in for the counter. The management did indicate some strong second half of FY26, and that's why you can see some buying interest which has emerged in this jewelry maker. 2% gains coming in for Titan. Shriram Finance also with about 1% gains coming in for this NBFC player. The company did name Parag Sharma as the new MD and CEO. That is why the street seems to be celebrating on that news as well. Eternal also seeing a gain of about 1%. Adani Enterprises, remember that this is tomorrow will be the last day of its 25,000 crore rupees rights issue. So some buying interest coming in for there as well. Bharat Electronics seeing a gain of about 1%. On the other hand, the top losers include Asian Paints seeing a sharp decline of about 4% itself. Tata Steel with about 2% decline. Dr. Reddy's Lab, Tech Mahindra, M&M, Geo Financial, some of the other losers on the Nifty 50 at this point of time. But yes, to understand of how the last minutes of the trade look like and how you should be positioned in an environment like this, I'll quickly go across to my technical expert of the show. Joining me is Osho Krishan, Senior Analyst, Technical Derivative Research at Angel One. Osho, good afternoon. I mean, yesterday we saw a broad-based sell-off which gripped the markets. Today, Nifty has seen some bit of a recovery, but once again, the last hour or so, we are seeing a bit of a selling pressure which is mounted on Nifty. Expiry day swings, but what levels can we watch out next?
Very good afternoon, Lovisha. Firstly, thank you for inviting me at the show. Well, yes, no doubt we are witnessing kind of the benchmark index has slid below the exponential moving average, 20-day exponential moving average, and is now near to the 50-day exponential moving average. So overall market breadth has turned to kind of a bearish sentiments as of now. But technically, if I have to quote, then Nifty is having a kind of support of 25,700, which is the bullish gap, followed by 50-day exponential moving average on the higher end, as it has plunged below the 20-day exponential moving average. So that should be seen as the immediate hurdle. So 25,700 followed by on the higher end 26,000, 26,100 will be the resistance that can be seen in the coming period. Overall, some volatility is expected in the benchmark index, and it is advisable to maintain some cautious stance and not to get very much aggravative with any kind of dips or any kind of bounce in the market. Better to have a pragmatic approach and look for thematic movers in current market scenario.
Okay, all right. That's something that we need to watch out for. What about the Bank Nifty index? I mean, it did see some recovery today. PSU banks particularly are doing well. On the levels front, how does it look like? Anything that you're liking from this space?
Bank Nifty comparatively is looking very positive because the major support of 58,800 is still intact, and any kind of dips is auguring well for the bulls in the banking space. Today, as you mentioned, that PSU counters have started gaining some traction. The counters like Federal Bank, which is already at a higher zone, has started gaining a decent traction. So I'm expecting that some of the selective counters from banking space can see some kind of momentum in the coming period. From the private sector bank, HDFC Bank is looking quite positive, not very much aggressive at current levels, but on a decent manner. It is hovering in a very strong stagnation zone. So I'm expecting that in the coming period, 1020 to 1030 will be the target that one can expect in HDFC Bank as well. So overall, banking is looking quite positive as compared to the benchmark index Nifty 50.
Okay, all right. Bank Nifty looks comparatively better then. All right, let's discuss more about sectoral indices. IT sector, despite today's decline, it has seen a good buying interest in this month itself. But Osho, what can we watch out next? I mean, ahead of the FOMC meeting, we're seeing a bit of a profit booking, which has occurred in the large cap IT names.
Overall, I expect there can be some kind of profit booking that can be seen in IT space. Even in the US counters also, there are some kind of correction phase that is going into IT tech company. And even in Indian market, there has been a strong secular movement in most of the heavyweights and mid-cap IT counters. So I'm expecting that in the short-term period, there is possibility of some kind of profit booking. Players like HCL Tech, Tech Mahindra, which have already seen a vertical rally in the recent period, they might go into some kind of consolidation or profit booking in a very short term time frame. Overall, the technical structure remains robust, and I am expecting that dips should be augured well in the IT indices. Overall, I am quite bullish, but for coming 1 to 2 weeks, I am expecting some kind of consolidation in the IT counters.
Okay, some kind of consolidation is warranted in the Nifty IT index. Let's discuss about Nifty Consumer Durables Index as well, because the stocks have done well and the index particularly has snapped its 6-day losing streak in today's trading session itself. You can see the likes of PG Electronics doing well, 5% gains coming in from there itself. Amber Enterprises, Titan leading the gains with about 2 to 3%. Voltas, Havells, Blue Star, all of these counters have been doing well. Anything that you're liking from the consumer durable basket, and how does the trend look like, Osho, for you?
Definitely from consumer durables, Titan is looking very positive. It has tested the zone of 50-day exponential moving average and has shown a very strong resilience around the same levels of 3750 to 3780 in the last three trading session. And today we are witnessing a very strong momentum in Titan. So Titan will be the preferred pick from the counter. I'm expecting nearly 3920, 3940 to be seen in the immediate perspective, followed by PGEL. PGEL also has seen a decent correction from the breakout zone and again has retested the strong support levels of nearly 510, 520 odd levels. So I'm expecting in the short term period, the possibility of retesting 590 to 600 is higher in PGL, and one can look for buying opportunity in this counter as well.
Okay, all right. Those are the stocks from the consumer durables basket we need to watch out for. All right, let's shift focus and talk about the realty index because yesterday it was one of the top sectoral underperformers. But today the index has been doing well, and the stocks like Godrej Properties is seeing a gain of about 3.4%. Prestige, Oberoi Realty, Phoenix Mills, all of them are seeing a gain of about 1 to 2% itself as of now. But yes, Osho, I mean, on the day of the RBI rate cut, this index did well, but yesterday it was the top underperformer. Today, once again, we are seeing a little bit of a pullback. I mean, there's quite of price swings which has been happening in the realty basket, but what are you anticipating from this index? And of course, anything that you're liking from the space?
See, overall, it is a rate sensitive counter, so that's why there has been some kind of volatility in the recent period. But overall, the technical structure of Nifty reality is quite on the sideways to positive front. There has been some counters which are performing very well, and there has been some counters which are struggling at the support level. So I'm expecting that there might be some stocks which can outperform the index. Phoenix Mills will be the top preferred pick from the reality space. It is at 1740 odd levels, and I am expecting that it is on the verge of giving a breakout. So any breakout above 1780 can provide very strong momentum, and on the higher end, 1840 to 1860 will be the target that one can expect in the short term period, while on the lower end, 1700 and 1680 is very strong support level. So any dip should be augured well for the buyers in Phoenix Mills.
Okay, all right. Phoenix Mills is a buy for now. All right, let's move on and talk about some of the individual movers today. Of course, the headline stock continues to be your Interglobe Aviation. The stock has pulled back into the positive territory, 1% gains coming in for the counter after seeing over 15% drop this month already. Now, the airline today itself saw 300 flight cancellations after days of disruption, and the center has cut its winter schedule by about 5% and reallocated those slots to other airlines in response to this meltdown that they have seen. Brokerages have slowly turning positive on the counter, because we saw Citi giving out a buy call on the counter, and they believe that they're not too worried about the near-term disruptions, and they expect that the normalization is expected to take place in the next 1 month itself. Morgan Stanley also believe that that Indigo has been hitting a rough patch, and despite that, they remain overweight on this particular counter. Osho, how do you view this? I mean, brokerages are slowly turning positive. Today, the stock is back again in the positive territory. I mean, mild gains, 1%. But yes, how do you view this particular trend panning out for?
Overall, I am expecting that volatility might stabilize at current levels, because on the monthly time frame chart, the zone of 4800 has been the breakout levels, and in the last two trading sessions, the counter has been kind of consolidating around the zone of 48 to 4900 kind of levels. So I'm expecting, if news comes or news on the positive front should be there in Indigo, then from here onwards there can be some kind of resurgence or recovery that can be seen in the coming future. Overall, it is not advisable to go with the volatility, but one can definitely start accumulating the counter in a staggered manner at current levels, because it is at a very strong support levels on technical front, and technical indicators have also corrected towards the oversold terrain. So at current levels, it has started looking lucrative, but again, it depends on the news flow, that how the operations are going on with the Indigo flights, and accordingly one can start accumulating it, but in a staggered manner.
Okay, all right. Can accumulate from a staggered manner for Indigo. That's the view. All right, let's take another stock in focus, which has been in headline, and now right now it's seeing good volumes and good uptake. That's your Keynes Technology, 14% gains coming in for the counter, and the stock has finally rebounded today after it saw about 30% fall in the past 5 days itself. Now, this came in the wake of some few positive brokerage notes as well, and JP Morgan, which has highlighted that the company's attractive valuation in the wake of the recent drawdown is something that is what is appealing them as well at the current price point. Macquarie too, in its report today, stressed that the management clarification on Kotak's report has sounded reasonable, and the firm has retained an outperform call on Keynes Tech and given out a target price which implies a potential upside of 100% from current levels. Osho, I mean, some good brokerage notes that came in today. The stock has been soaring in the trade. I mean, 15% gains. So, I mean, can we say that the worst is over for this particular counter?
It will be very early to say that the worst has been over, but definitely there is kind of a breather that the counter has been witnessing at current levels. Although 3900 zone is a historical support levels, because in the recent period, in the month of February 2025, the counter has tested the same levels, and from there onwards we have seen a very strong resurgence. So technically it is at a historical support levels, and indicators are also into oversold terrain. So there is a possibility of breather or recovery in the short term period, and I'm expecting that in the coming future, in the short term perspective, 5200 to 5300 will be the immediate target that one can expect in the counter. While those who are holding position, it will be advisable to keep a strict stop loss of 3850 and hold the counter for 5300 kind of levels in a short term perspective.
Okay, all right. That's the view for Keynes Technology as well. Let's address another stock in focus. That was your rice stocks, because they came under significant selling pressure today after US President Donald Trump warned of fresh tariffs on Indian rice, citing some dumping issues that they are seeing. As a result of which, we did see shares of L&T Foods, KRBL, Kohinoor Foods came under pressure, but right now all of these particular counters have come off their day's low. Osho, how do you view this decline that came in today, the selling pressure on the base of this news and the fresh warning ahead of US delegation visit to India?
Overall, I'm expecting that looking at the technical front, firstly, majority of the counters are at very strong support of 200-day exponential moving average, but there might be volatility associated in the coming future. Overall, technically, I'm expecting a decent movement in KRBL because it is at a very strong support levels, and we have seen it to be into a secular uptrend. So I'm expecting that once the news rolls out or once it gets subsides, then we can see some kind of positive traction coming back. For L&T Foods, again, this counter has given a breakdown, but again, there is some kind of recovery that has been seen in the counter from intraday lows. Overall, one can look for buying opportunity once it breaches the zone of 420 on a decisive manner. For L&T Foods, it's better to avoid at present. Any breakout above 420 can provide very strong momentum in the coming period.
Hmm. Okay, all right. That's the view coming in for this particular counter. That's your rice stocks, and we'll be watching on how the trends emerge going forward itself. But yes, let's take another stock in focus. That is your Coforge. The stock is seeing a decline of about 4% today. That came in after the management held its analyst call as well. Now and the Coforge has maintained that it will not be giving out its margin guidance, but it sees a floor of about 14%. And they also said that the tech budgets for calendar year 2026 is still not out, but it could be lower than those of 2025 itself. So that is what could be weighing on the counter itself. But Motilal Oswal gave out a positive view on the counter, and they remain positive, and they have projected upside, which is in excess of 50% from the current levels. But yes, the stock is being weighing down today, 4% downtick coming in for Coforge. But in the past 1 month, we have seen that the stock has seen some buying interest. Osho, what's your view for Coforge?
Technically, the counter is into a bullish terrain. There has been formation of higher lows on the weekly and daily time frame chart. Although the zone of 2000, which is the breakout zone for the counter, has provided very strong rejection in the recent period, and the counter again have started showcasing some kind of profit booking. But I'm expecting that any kind of further correction towards the zone of 1750 or 1700 odd levels can provide some kind of a strong cushioning to the counter and can be seen as buying opportunity. So overall, the technical setup is quite bullish and dips should be argued well in the coming future. Although on the higher end, 2000, a breakout above 2000 will be very crucial. And once it happens, then from there onwards, we can see tremendous upside rally in the coming future. But for now, better to wait for some kind of correction towards 1750 and start accumulating the account.
Okay, all right. A correction below 1750 is the right time to accumulate, and 2000 levels is something that we need to watch out for Coforge. All right, let's move on to another stock in focus, that is your Sambhav Steel Tubes. This particular counter has seen, the stock has gained about 6% in today's trading session, and the buying on the counter came after the company's board has approved an expansion plan for the manufacturing of its stainless steel rolled coils and pre-galvanized coils itself. Osho, I mean, the stock has done well today, but in the past 1 month, the stock has been quite negative, and so far this year also the stock has been, trailing downwards. So, what can we watch out next?
Technically, the data is quite limited in the counter, but I expect that with the kind of resurgence from the lifetime lows the counter have witnessed, there is possibility of some traction in the coming period. Although on the higher end, I am expecting that the zone of 108 to 110 can provide very strong hurdle to the counter, and the breakout above 110 can only be attracting some kind of buying traction in the coming period. For now, I expect the zone of 88, which is the low kind of zone, that should be cushioning any kind of further dips, and 110 to be seen as the immediate target for short-term trader.
Okay, all right. That's the view for Sambhav Steel. Let's take another stock in focus. That is your Kaplan Point. Given that its subsidiary has secured a final approval from US FDA for its ANDA application of linzoid injection itself, and the product is a generic equivalent of Pfizer's Zyvox and is primarily used to treat serious bacterial infections, and that's why the stock is in focus. But yes, I mean 2% decline coming in for the counter itself. Osho, can we expect further fall from the current levels? I mean, despite the news, the stock has remained quite unenthused, and from September highs also the stock has seen quite a downtrend.
Firstly, Kaplan Point is low traded volume kind of counter, so the volatility is less, and even the traction is also less in the traders fraternity. But I expect that with the kind of development it is having a very strong consolidation at support levels of 1900. So there can be some kind of traction in the coming period, positive traction that can be seen in coming period. But 2000 being a major hurdle of 200-day exponential moving average event coinciding with 100-day exponential moving average. So that will be a crucial hurdle. Like breakout above the zone of 2000 can provide some kind of continued momentum. Till that time, better to stay sidelines from this count.
Okay, all right. Till that point, better to remain silent on this counter. Now, let's move on and talk about the insurance sector, given it has delivered a strong November 2025 performance, where the retail EP has risen by about 27%, and the growth is primarily driven by the GST exemption benefits, a favorable base due to the festive period, and base normalization after last year's surrender regulation impact itself. And brokerages have retained quite a positive view on the counter and expect the momentum to continue. Osho, I mean, since September, insurance stocks have been quite mixed, however. Despite what we have seen in November, the premium growth has been quite strong after the GST exemption benefits. But anything that you're liking from the space, from the insurance basket?
There are selective counters which are looking positive on the technical front. First one is HDFC Life. It is having a very strong consolidation above the cluster of short-term moving averages, and I'm expecting that once it breaches the zone of 790 to 800 on a higher zone, then from there onwards it might gain strong traction in the coming period. So one should definitely keep this counter in the watch list. Any kind of dip or any kind of further correction towards 745 to 750 can also be seen as buying opportunity in HDFC Life, followed by SBI Life is also looking positive to me. It is on the verge of giving a fresh breakout around the zone of 2100, but overall the technical setup is still very positive. Even if there will be any kind of correction or profit booking in the counter, then 1900 to 1920 can be seen as buying opportunity, and on the higher end 2050 is the immediate target or immediate hurdle. Once it breaks through above the zone of 2050, then we can see some kind of a strong traction coming in the counter.
Okay, all right. That's the view from the insurance basket itself, and SBI Life could be one of the top performers. All right, let's move on and talk about another stock in focus, that is your IndusInd Bank. The stock is seeing relatively mild gains, 0.4% gain coming in for the counter. But yes, there is a new development where the private lender has made several senior level appointments as a part of its internal restructuring. And this comes as a part of the bank's efforts to strengthen its capabilities across its core business. And after we have seen that the lender did see some accounting discrepancies which made the stock fall after May itself. But yes, the bank has named Amitabh Kumar Singh as CHRO. The bank has also named Balaji Narayan Murthy as the Chief Data Officer as well. The stock has done decently well, and if you look at the past 1 month, the stock has seen about 5% gains. Osho, IndusInd Bank, I mean, it has left the Nifty 50 index, but it's still one of the top underperformers. If you look at the YTD charts, the stock still remains on a declining trend.
Technically, there has been some kind of positive developments in the counter. There has been multiple positive crossover within the EMAs of a daily time frame chart, but I'm expecting that once it breaches the zone of 875 and 880 on a decisive manner, then from there onwards we can see some kind of a strong traction coming back in the counter. While on the lower end, any kind of correction towards 820 or 800 can be seen as buying opportunity. So for now, I'm expecting that the trading range for IndusInd Bank is nearly 800 to 880 kind of zone, and with a positive bias, the counter is moving in the recent period. So one should look for accumulating on the lower dips or wait for breakout above 880 to have a strong gain in the coming future.
Okay, all right. That's the view for IndusInd Bank. Multiple positive triggers emerging for this particular counter, but a percent gains, that's where the private lender is at as of now. But yes, let's talk about another sector in focus, that is your Nifty Defense. Well, the index has cracked below its 200 DMA moving averages. And of course, if you look at Nifty Defense, however, right now, it's showcasing a gain of about nearly a percent, but so far this month itself, the index has seen about 7 to 8% decline. Osho, what's your view on the Nifty Defense basket, and of course, anything that you're liking from this space?
There has been multiple breakdown from the defense counter, although the technical view remains on the positive front because the broader time frame construes a kind of a positive momentum or positive setup, and majority of the counter from defense space are at their strong support levels. Firstly, for BEL is having a very strong support near the zone of 375 to 380. So these levels should be seen as buying opportunity for BEL. Now coming to Hindustan Aeronautics, then this counter has also seen a decent correction in recent period and is now placed at a very strong support of 4250, 4200 kind of levels. So I'm expecting that one should wait for either a kind of a resurgence in these counters or can start accumulating at current levels, but the time frame should be from medium to long term perspective. In short term perspective, there might be some kind of further consolidation or breather kind of scenario in these counters, but from longer term duration, I am quite bullish in these counters.
Okay, quite bullish on these particular counters for the Nifty defense pack as well. All right, let's talk about another stock in focus, that is your delivery. The stock has been seeing good gains today, nearly rising about 4% after the company did roll out Delivery International for the Indian MSME itself. But yes, it's an overall weak market. The stock has done quite well, and they've already launched your Delivery International, which is a new economy air parcel services aimed at making global exports more affordable and seamless for MSMEs and enterprise customers itself. But yes, delivery, how does the stock look like? I mean, the stock has done well this year itself, but the stock has been entering a consolidation zone, Osho. What can we expect next?
But technically, today the counter has seen a very strong resurgence, and the kind of candlestick formation it has made on today's trading session, I am expecting that the bottom has been made for short-term perspective. Although on the higher end, 435 to 440 is a very strong hurdle, and once it breaches the zone of 440 on a decisive manner, then only we can see some kind of positive traction coming back in the counter. But for now, I am expecting that it might move in a zone of 395 on the lower end and nearly 435 to 440 on the higher end. So the bias is quite bullish, and one can look for accumulating in this counter for short-term target of nearly 435 to 440.
Okay, all right. 435 to 440 can be the next target for delivery. All right, let's take another stock in focus. That is your Marico, because it did come out with its FY25 annual report where they have targeted low to mid-teens CAGR in revenue over the next 5 years itself, which will be leading by a blend of organic and inorganic growth itself. Right now, however, the stock has been quite flat to a positive bias. Osho, I mean, the stock hasn't really moved anywhere this year itself. But for Marico, any levels that you are watching out next?
I'm expecting that there might be a V-shaped recovery in the counter on the higher end. 765 will be the target that one can expect in short-term perspective. The counter have seen a very strong reversal in the last three trading sessions from the zone of nearly 710, which even coincides with the 200 exponential moving average. So I expect that 710 should be acting as a very strong support levels, and 765 will be the target that one can expect in the short-term period.
Okay, all right. All right, that's the view coming in for Marico. But yes, let's take a look at the last rates that's coming on your screen for the Nifty, which has closed with about 100 points decline for the Nifty. It slipped below that 25,850 odd levels itself. Yesterday, we did see Nifty slipping below that 26,100, then 26,000 itself. And right now, we can see that Nifty has once again shaven off that 25,900 odd levels itself and below that 25,850 odd levels. So yes, the journey has been quite tepid, so to say, from yesterday itself. If you look at Sensex, also seeing a decline of about 400 points, nearly 0.5% cut coming in for this benchmark index itself. Bank Nifty also closing with a negative bias, flat with a negative bias, so to say. Nifty Midcap Index, however, seeing a good resurgence, seeing a gain of about 100 points as of now, nearly 0.3% gain coming in for the Nifty Midcap Index. But yes, the advance decline ratio that still remains in the hands of the advances. Advances have taken the upper hand. So that is a good takeaway that is coming in for the markets. India VIX has cooled off by about 1% itself. If you look at Nifty Consumer Durables Index, like we were talking about earlier, it has closed with steady set of gains, 1% gains coming in from there itself. On the other hand, some of the other sectoral pockets which have done well, that includes the likes of Nifty PSU Bank, Nifty Realty also seeing a gain of about 1% itself. On the other hand, what did not do well in this market was Nifty IT Index, seeing a cut of about 1%. Tomorrow, of course, we'll be watching out for the FOMC outcome. And there's a section of traders which has been expecting that there could be a surprise hold by the chair Jerome Powell itself. So that is why we can see a little bit of caution which is crept into majority of the technology names itself. On the other hand, if you look at some of the other sectoral indices which did not do well, that includes the likes of Nifty Metal Index, that is down by about 0.3%. Nifty Pharma Index also losing in the trade with about 0.2% decline coming in for the Nifty Pharma Index as well. So to speak, we have slipped below that 25,850 mark, but yes, the market texture still remains in the favor of advances, and whether or not we can pick pace from here on is something that we need to watch out for. But yes, coming to the top gainers and losers of where we are at, Titan doing quite well, 2% gains coming in for the counter. Like we were discussing the stock with Osho as well, he remains quite positive on Titan, and the structure has been quite bullish on the technical charts. Titan showcasing a gain of about 2%, Eternal doing well with about 2% gains itself. Shriram Finance also showcasing a gain of about 1.5%. Adani Enterprises, Adani Ports, Interglobe Aviation finally back in the Nifty 50 gainers list with about a percent gain coming in for Indigo itself. Bharat Electronics, Coal India, some of the other gainers on the Nifty 50. Let's take a quick look at the losers. Asian Paints, she's seeing a sharp decline of about nearly 1% itself. Tech Mahindra not doing well. Some of the tech stocks dominating the top Nifty losers list. Tech Mahindra, HCL Tech seeing a decline of about nearly 2%. Tata Steel, Dr. Reddy's, Wipro also seeing a decline about 1.5% itself. So yes, but yes, one of the top losers on the Nifty, that continues to be Asian Paints. It's seeing a sharp decline of about 5%. Osho, what do you make of this decline that Asian Paints has seen today? I mean, 5% decline, that's quite significant.
Yes, for Asian Paint, I'm expecting that in the current period, there might be some possibility of further profit booking because the counter has seen a very strong momentum in the recent period. The counter has seen a very strong breakout from the zone of 2500, has tested approximately 3000 levels. So there can be some kind of possibility of correction in the counter near about the 50% retracement comes around the zone of 2750. So that could be seen as the immediate target on the lower end. If it happens, then that could be seen as the potential for further correction or not. We have to again review the counter, but for now, I'm expecting 2750, 2720 to be seen as the immediate target in Asian Paint in the short term period.
Okay, all right. That's the view for Asian Paints, one of the top Nifty losers. All right, just one last question before we let you go, Osho. I know we discussed a range of stocks, but what are you watching out for? Any top picks that you're watching from the markets?
Basically, there are two counters I am quite bullish on. First one is Titan, definitely, because the kind of resurgence it has witnessed from the 50-day exponential moving average. I'm expecting that in the coming period, there might be further positive traction in this counter. So 3980 to 4000 will be the target that I'm expecting on a positional basis. And 3770 is a very strong support levels. So that should be act as a stop loss for short-term traders. The other counter which has gained very strong traction in terms of volume is Anand Rathi Wealth Limited. So that counter have been at a very strong support levels of 50D EMA, and also it has gained very strong volume. So I'm expecting that in the coming future, there's a strong possibility for the counter to test the zone of 2960 to 2980, while 2780 will be the advisable stop loss for the counter.
Okay, all right. Titan and Anand Rathi, those are the two stock picks that you are watching out for. But with that, we have to let you go, Osho. Thank you so much for your time and joining us.
Thank you so much.
All right, it's once again a day of negative for the Nifty because it has extended the losses to about the second consecutive day itself. It has slipped below that 25,850 odd levels as of now. But yes, some key factors that did keep bulls in check in today's market. Of course, it was the first investors have been awaiting the Fed outcome tomorrow. And investors are widely expecting a 25 bips rate cut in this meeting. But there is a section of traders that are anticipating what if there's a surprise hold by the chairman Jerome Powell, and that could firm up dollar and aggravate the FI selling which is already taking place in the markets. As a result of which we did see Nifty IT index also seeing a profit booking and saw a decline of about 1% itself as of now. And you can see from the tech space, TCS, Infosys, HCL, all of them saw a decline of about 1% each itself. Because if you look at the global central banks across, be it Reserve Bank of Australia, Swiss National Bank or even Bank of Canada, all are expected to keep their policy rates unchanged, as a result of which there's a section of market participants who are expecting that there could be a surprise hold tomorrow itself. But yes, that is something that we need to watch out for. But yes, the second factor that has been keeping the markets a little bit deeper into the negative territory is the FII that has continued to do their sell-off. So far in December, we've already seen about 6,000 crore rupees of sell-off. After November also saw FIIs offloading equities, which was worth about 12,000 crore rupees. And finally, today's weakness also comes on the back of Nifty expiry, which has sparked some volatile swings on the breadth of the markets. But yes, given that Nifty has slipped below that 26,000 levels, whether it can reclaim those levels is something that we need to watch out in the upcoming sessions. But yes, to understand how the market looks like for the long term and how you should build your portfolios, joining me is Nirav Karkera, Head of Research at Fisdom. Nirav, good afternoon. I mean, the market structure continues to remain muted. Today, we're seeing a bit of optimism, but there is a broad-based sell-off when it comes to FIIs keeping away. So what do you think is keeping the sentiment muted? And do you expect this picture to remain the same for the time being?
So, Lovisha, a couple of things, right? A couple of days back, in fact, weeks back, the Nifty showed a new record high. And that was not as encouraging because of the advanced decline not being in favor of the market breadth, right? But what we saw today, right, was a slight reversal of that narrative. So while the markets witnessed a very steep cut before finally recovering towards the end of the day, what we also witnessed was a very good recovery across the breadth of the market. So that reflects a bit of underlying strength and resilience in terms of investor sentiment being reflected. But having said that, markets can be expected to be on the tenterhooks, through the week. Of course, it was the expiry, but much more critical developments are on the cards. Of course, US Fed is one very important episode that we are watching very closely, and this is bearing heavy on investor sentiment. But apart from that, there's also this entire India-US trade deal that's supposed to make some headway within the week itself, right? So the outcome is largely unknown as yet. It remains a developing situation. So amidst such big key events, there are, of course, small little flashes of deflections that come by way of US not being very happy about India's rice exports to the country. Of course, that is not as big a problem in the face of the other two major events that we spoke about, but a culmination of these uncertainties, right, also is bearing heavy on the investor sentiment globally. It is not just an India-specific phenomenon, but it is also, FIIs participating into emerging markets entirely, where the sentiment is slightly risk off, and India is just witnessing a part of it.
Okay. Nirav, you were talking about the rice stocks. Of course, they were under pressure today after the President Donald Trump's warning on fresh tariffs on Indian rice. But do you believe that this is just a negotiation tactic ahead of the US delegation arrival in India today?
I mean, it's not, even if it is a negotiation tactic, it does not seem like a very powerful one. In fact, the scale of power are not really tipped in favor of the negotiation, if that's exactly what US is gunning for. If you look at the, share that India owns in terms of exports of rice globally, it is 40% plus, right? And it is sub 5% to the US. In fact, over the past decade or so, the product mix of different types of rice, right? There's brown rice, broken, parboiled, organic certified basmati rice has also shifted to a larger concentration of long grain basmati rice, which constitutes around 85 to 90% of the total imports of rice that US makes from India. And this is a very, largely irreplaceable quality. It has a very distinct texture, aroma, and the reason for its demand not really easily replaceable by US homegrown, rice. And also at the same time, if you look at India as an import source for US, we are a critical import source, right? So we do still take almost a quarter of the share of the total imports of rice that the US makes. So we are critical import sources, and while at the same time they might not be the most important, of course they are important and critical, but they are not the largest export destination with a sub 5% market share. So it is a very non-powerful sort of a negotiation tactic, if at all it is one. So we feel it is not much to read into. In fact, if US were to look at rice being dumped from from countries outwards, Thailand and China have been propping up its shares of export to the US significantly. So at this point in time, India seems favorably positioned. Of course, we would not like to lose out any share of export. But having said that, in this situation, the importer needs the exporter as much as the exporter needs an importer, if not more than the other one.
Okay, okay. But how do you see this transition? I mean, of course, apart from the rice stocks where they have mentioned that, they could introduce fresh tariffs, India is also looking at other export markets. I mean, we did see India-Russia meeting where they have said that, they have signified that there could be some deal on the front of marine exports. So this transition from, to offset the impact of these tariffs, is this going to be the next approach for India, or is it still some time away for India Inc. to actually navigate all of these tariff pressures?
So, India has been diversifying its export base for a very long time now. If we look at the trend and the trajectory, right, it has the export diversification agenda has been underway for a very long time now, since almost a couple of years. So, it is not just a India-Russia relationship specific thing or a US tariff specific thing. It was a development anyway underway. It is just that the new tariffs are expected to give a fresh bout of impetus to this agenda going forward.
Okay, okay. Nirav, coming to the point of, the US Fed, of course, the meeting has started today, and, the 25 basis point rate cut is mostly a done deal. But from a language perspective, from the Fed commentary, what factors are you watching out from this meeting? And given that, next year we'll also be seeing a new Federal Reserve chairman, something that you're, keenly watching out for from this meeting.
Yeah, so among various things, of course, the 25 pips rate cut is something that is widely anticipated, and we also believe that something in the same direction will materialize. But the underlying tone is not very comfortable. It is a hawkish cut largely. There are conflicting signals by the data. So on one hand, you have the inflation numbers. On the other hand, you have the labor numbers, and not creating a very very concrete case. So this seems like a shorter term solution right now, with the larger problems still being at bay and yet to be resolved. Within the meeting, we'd be looking for the sense of direction going forward through the dot plot as well as the commentary by the US Fed. Of course, there are a few front runners for the next US Fed chairman, and there is very limited reason to anticipate what the general direction of the behavior would be. But considering the way the current administration is looking at things and the directions it wants to take, and assuming that it would have a significant influence on the new chair, we could expect further rate cuts to be on the table. If nothing, the probability has at least increased a tad bit with this change of chair. So going forward, we believe the current rate cut to be largely transitory. If it does indeed come through, what will matter a whole lot more is the underlying guidance on subjects, especially of labor and wage rate growth and inflation.
Okay, okay, got it. Nirav, let's also talk about the broad end of the markets, because that's seeing a deeper sell-off. Small cap index in just 2 days, it has slipped about 2 to 3%. Today, it saw a bit of a recovery. But do you expect the caution to continue? And of course, how are you placed here?
So there will be caution, and is expected to sustain for much longer, probably through the rest of the FI as well, especially towards the deeper end of the market. So small caps have been largely vulnerable to flows and outflows. So at the same time, valuations are not really comforting as yet. Even if we look at the recent set of earnings print, it is not as heartening as perhaps a mid-cap counterparts would have published, right? So we are some way away from seeing a proper thorough earnings recovery in the small cap pack. Again, whenever we talk about small caps, one thing one needs to understand is that it is not entirely fair to paint the entire pack with the same brush, because there are several pockets of opportunities as there are pockets of traps. But if you talk about the basket in aggregate, it will remain sensitive to exodus of capital and tightening liquidity situations on account of domestic and foreign investors pulling out. And unless there is a steep recovery or signs or promise of a recovery in the earnings going ahead, which we expect will probably come through with a little bit of delay, not in the immediate quarter, but perhaps show signs in the quarter after that, starting next FY onwards. That's when we could start seeing some very good thorough interest. Not that the entire pack should be written off, but this offers an opportunity to enter pockets where some of the froth has been cleared away and businesses remain fundamentally strong.
Okay, got it.
An aggregate level, it should come by sooner than later. And if you talk about the primary markets, there is a note that one needs to make, that although there's a whole lot of headlines that has been made about FIIs exiting in the secondary markets, there is a fair share of participation through foreign institutional investors in the primary markets back again. So this sort of, among various things, signifies that there is value and there is growth that is expected within Indian equities. It is just that FIIs want to be much more selective about the opportunities and the plays and the themes that they are getting into. And with the entire IPO pipeline really buzzing, we are expecting the listed universe to introduce several niche plays that could warrant a lot of interest, not just from domestic but also global investors. So there is definitely some minimum value, and this is against the backdrop of a strong macroeconomic setup. So we expect the earnings lever to be the biggest catalyst in spurring the next leg of rally from here on.
Okay, got it. Let's talk about some of the individual stocks. Nirav, I mean, Indigo stock today, it did quite well. It reversed some of the gains. But of course, it was just a percent up in today's trading session. But then there are certain brokerages which have started turning positive on the counter. They're saying that this particular entire disruption of flight cancellation on the back of the FDTL norms is basically just a short-term phenomenon, and in the next 1 month or so, Indigo will be settling down once again itself. But with DGCA announcing and ordering the airline regulator to cut flights by about 5%, can we see an earnings impact for Indigo? Is this something going to be meaningful going into the long term?
So the bull case is largely narrative led. Of course, it is a market with very few competitors, right, and even few listed on the Indian markets. There is no denying to the fact that Indigo does own a significant market share in terms of routes that they own and they occupy. So this entire new set of FDTL norms is expected to deal a pretty intense blow to operations. That's for sure. And there's very limited reason to assign any timeline or to expect a timeline within which this issue could be resolved, because this is not something, the norms are not something that kicked in overnight, right? It was issued very well in advance, but there was a lapse in planning. And the entire fix, if it were to entirely comply with the FDTL norms, and this is sans any exemptions or relaxations that could probably come by, it'll take a slightly longish period to fix the operations for thorough compliance. And this comes in during a period where the entire aviation sector faces a couple of headwinds, and there is intense competitiveness within the segment. So life is not going to be easy from here. Definitely, it is a very strong business operating in a sector with a significant market share, a lion's share of the market share, if you will. But there's no reason to go bargain hunting as yet. I feel one needs to watch out for the exact timelines for how long will it take for Indigo to get its compliance in order, and for it to also be able to regain the market share that it has lost due to this disruption. Of course, the DGCA regulation that came into slash operations by 5% is only further exacerbating the issues, not just for the airlines, but for the consumers at large. We are expecting some very serious government intervention, because this is affecting mobility of goods and passengers, and it has now turned into an economic phenomenon, not just a sector specific phenomenon. So the second order implications are something that we are yet seeing unravel as we progress by the day. I would say at this point in time, this is a wait and watch situation. It's a developing story. There's very limited reason to believe in a quicker turnaround at this point in time. It is more hope than analytical. And will there be an earnings impact? That is almost with a very high degree of certainty a yes, at least in the near term. The disrupted operations is going to have a direct and a very sharp impact on earnings, the extent of which is unknown as yet. So the probability of a shocker on the downside far outweighs the probability of any surprise on the upside, at least in the near term.
Okay, all right. That's one stock that we need to watch out for, and of course the news developments that are surrounding this particular counter itself. All right, with that thought, we have to let you go, Nirav, but thank you so much for connecting with us and taking us time.
Thank you.
All right, that's all we have for this edition of Closing Bell. Markets, despite ending on a negative note, did see a smart rebound from the day's lows, and we will be watching out if Fed's commentary and the rate cut can propel the bulls higher this week itself. So yes, it's a wait and watch scenario, but for now, it's a wrap from me. Thank you for watching, and do stay tuned to moneycontrol.com.